business news, where news for business people.
Thanks for tuning in to the Mutual Fund Show. I'm Neeraj Shah, and today on the show we are going to discuss mutual fund scheme consolidation. Now, all of you have heard that there is this news that is out. SEBI's mandated mutual funds to do so. Everybody is grappling with trying to figure out what the impact of this could be. Now, there's a very interesting quote that I want to start off this show with. We're not talking about any kind of calculations as of now. All of these are subject to the realms of fantasy, at least from my end. But our guests on the show will essentially talk about this. But here's what I want to start off the show with. Barry Schwartz, in his book, says that people tend to make suboptimal decisions if given too many choices. Later, regret or do not stick with the choices. Now, you know, this could well be true, not just from a perspective of investing, but for life at large. But a lot of times we've seen that what is true for life at large at times becomes true for the process of investing as well. And that's my question to our guest on the show. Aashish Somaiyaa of Motilal Oswal AMC joins us on the show with his thoughts. Also a bit later on, of course, we'll be joined by Pankaj Mathpal of Optima Money Managers as well. But Aashish, thanks so much for taking the time out and joining us on the show as well. A pleasure having you always. But this could well be true, right? If I have a bunch of choices, and I don't know everything about all of those choices, I might get confused as to what should I be doing in the first place.
Obviously, I mean, having choices is reflective of a developed market. But then the whole point is that when people have too many choices, and especially when the choices are not clearly defined, they are like clones of each other almost. It's very difficult to make choices. And you end up making suboptimal decisions. And after making the choice, you are yet not sure whether I did the right thing or not.
Yeah.
So the stickiness of such a decision is again seriously in doubt.
Yeah, you probably get to know about this only in hindsight.
Yeah, because the moment something goes wrong, you are most likely to think, oh my God, did I make the wrong choice just a few steps back?
Yeah, now, so these are life lessons maybe, but let's try and apply these to mutual funds as well, because as we all know that there are some changes that are going to happen, probably already happening. Now, Aashish, tell us, what is this decision all about? Are you in favor? Because I presume when this came about, we spoke to you and you sounded to be in favor. Why are you in favor of these? And what's the impact? Too many questions, too long a topic of discussion, but let's start off somewhere.
No, so, I think I'm in favor very clearly. The reason is because it makes life simple for everybody. Most importantly for the most important stakeholder, which is the investors, because ultimately who are we doing all of this for, right? So just to take you back a little bit in history, mutual funds have been launched now over 25-30 years. And it's very simple that 25 years back, if a particular fund was launched, and let's say they said that, okay, this is a mid-cap fund. And let's say I launch a mid-cap fund 3 years back. So the market has developed. The definition of mid-cap has changed dramatically. And many years back, there were no such regulations about what a fund should be nomenclatured, what is the definition of large and mid-cap. So let's say 25-30 years back, if I launched a mid-cap fund, I could just say it's a mid-cap fund and I could define for myself what mid-cap means. Now today, the industry has moved quite a bit and there is a need to standardize these definitions. So I think it's a good step because, there is a apple-to-apple comparison because the circular clearly says that the top 100 stocks by market cap is large cap, stock number 101 to 250 by market cap is mid cap, and 251 onwards is small cap and the rest. So it ensures that all funds are comparing the same things. Secondly, from investors' perspective, If I say my fund is mid-cap, but I have only 40% invested in what mid-cap is meant to be, then it's misleading. There is, if you are someone who likes to do your asset allocation, you said you thought that you bought a mid-cap, but the fund ends up holding something which is actually not mid-cap. So it makes life easier for clients. Plus, it also, most importantly, the circular says that in every category you can have only one fund.
Yeah, that was what I was thinking of as well. Sorry, but you make your point and then I'll ask my question.
No, I think it's good for clients. Yeah, so it's a simplification and it enables the right comparisons.
Okay, so that's the news. I think Aashish gave out the whole news. For people who are tuned in, don't quite know what this is all about. The SEBI circular says that mutual fund schemes to be classified in standard categories. Definition clear of large cap, mid cap and small cap as per market capitalization that Aashish spoke about. And more importantly, no AMC can have more than one fund per category. So if I'm not wrong, the number of categories, so in equity schemes, there are some 10 types, debt schemes, 16 types, hybrid schemes, about 6 types, solution-oriented schemes, 2 types, and other schemes, 2 types. So the number of types as well, and the number of categories in which mutual fund houses can have schemes have been brought down, and I dare say brought down dramatically, because if I'm not wrong, the number of schemes existing, I mean, what's the number of schemes that are currently in place, and how much would an average mutual fund house have to bring these schemes by? You guys have concentrated schemes, but a bunch of houses have a lot of schemes.
Yeah. So I think that, one of the things is that this has been in the talking for a couple of years.
Okay.
So everybody had a sense that this is something which is being discussed because the regulator has been proactive. They've been discussing with everybody, right? It's not like a bolt out of the blue. Yeah. So there was some planning behind this. So I think people have got time to plan things, number one. Number two, yes, if somebody has either poorly defined schemes, meaning that, your offer document is very loosely worded, it's go anywhere. So if you have poorly defined schemes, you would have to reposition them and ensure that they slot into whatever the regulator has defined as the categories. That is one fallout. The second is, of course, within a category. So let's say you rightly said that there are 10 open-ended equity fund categories and you have 12 open-ended equity funds, right? Then you, of course, have to ensure that they fall into these 10 slots. Something might have to get merged, something might have to get closed. Only exception being that sector funds are not included in this, because sector funds you can have auto fund, FMCG fund, pharma fund, etc. So what we're talking about is 10 types of diversified funds. So everybody has to fit in to that. And on to your question, I think if you just see open-ended equity funds, there are over 400. If you add all types of close-ended and FMPs and fixed income, we are over maybe 2,500 kind of number. So I don't see the number of schemes coming down dramatically, yes, to an extent, but I think it's going to be more of classification and reorientation of the schemes to fit into the slots.
Okay. So before we talk about how it makes it simple for investors, for an existing investor, Aashish, assuming that my scheme falls under a scheme which might have to be merged, consolidated, shut down, whatever the term may be, what would the impact be on a holder of such a scheme?
See, I think from a longer term perspective, it's positive for investors. The reason being that, you look at it this way. If there are 30 funds, do people really have 30 fund managers? So what is happening is that there are many cases where one fund manager may be managing 8, 9, 10, 12, 15 or 5 or 4 number of portfolios. So at least if the number of schemes is consolidated, I think the focus kind of goes up. So in the long run, it's going to be good. There's no harm to it. But as an investor, in the next 90 days, I should definitely keep an eye out that the schemes where I have invested, forget getting merged or amalgamated or closed down. The point is that, are they going to change their investment universe?
Okay.
Are they going to reclassify it in some way? Because I may have thought that I have bought a mid-cap fund, and that mid-cap fund had loosely worded definitions, right? Now the regulator very clearly says that if you are a mid-cap fund, then 65% of your portfolio should be between stock number 101 to 250.
Right.
And your mid-cap fund happens to be 40% in that bucket. So obviously you are going to see a churn in the portfolio because that 40 will have to start tending towards 66 or some such number. So you should keep an eye out on all kinds of communication as to what your particular scheme is going to go through, what kind of changes it's going to call out for. It's good to understand that for sure.
Okay, keep an eye out for that.
Keep an
for
eye out,
sure.
yeah, for sure. Yeah.
Okay, we'll talk about the impact on what happens to these schemes as well, but maybe there are some implications for the market at large too. Just a small deviation there, because CLSA came out with a fairly interesting note, and they say that large cap and small cap schemes are more or less compliant, but mid caps will see, according to CLSA, big buying. Now, why is that so? Jayesh Khilani has the details thereof.
So Neeraj, let's first have a look at what is the equity exposure that all of these equity schemes have a limitation on. So if you look at the new guidelines, multi-cap, the equity exposure stands at about 65%, large cap at 80%, and large or mid-cap funds 70%. Now this is divided 35% in large cap and 35% in mid-cap. The pure mid-cap fund, you have equity exposure of 65%, and similarly is for small cap. So with these limitations, the existing schemes that we have now, CLSA believes that the large cap and the mid-cap funds are more or less in line with what the equity exposure should be, and therefore the additional buying that will happen, that will not be much in large cap and small cap. So large cap, they expect buying of about 3,500 crores, small cap to the tune of just shy of 2,000 crores. But have a look at the mid-cap schemes. Aashish was also talking about the classification of mid-cap. So, mid-cap, they estimate that the buying will be nearly 20,000 crores, and this is expected to happen within the next 3 to 4 months.
Okay. That's fairly interesting, and I know, Jayesh, thanks a lot for that. So different houses may debate the numbers here and there, but by and large, you would presume that this is what will happen. And again, the definition of mid caps, as Aashish said, could be debatable too, right? I mean, while I agree, Aashish, that it's a great scheme, 101 to 250 or thereabouts, but you would presume that the stock which is having the market cap of 275 in that rank, could possibly be a great stock for a mid-cap fund, but now will not find presence in the mid-cap fund because it will have to be classified as a small cap. What happens to some of these schemes? I mean, do these stocks then find buying only in a multi-cap scheme or a small and micro-cap fund? How would that happen?
So, so the regulation or the new circular in that sense has it has some relaxations in the sense that it says that 65%, if you are a mid-cap fund, then only 65% of your portfolio at the minimum has to be between 101 to 250.
Okay.
So which means that theoretically the other 20-25% can be allocated that way. Now you can't use up the entire 35% bucket with filling it with small caps or large caps. So the point is, because at any point in time, whatever mid caps you're owning, they may be slipping in or they may be actually on the way out. So yeah, you do have a leeway to include ideas other than pure mid caps, but now at least there is some method to the madness.
Yeah, true. So and secondly, Aashish, what would we started off this conversation saying that we have to do, and this provides clarity to the biggest stakeholder in the AMC business, and that is the investor.
Investors, yeah.
Now, the obvious benefit to it is that if I'm an investor investing into a mid-cap fund, for example, I know that the category of funds that the AMC would have would essentially be largely between 101 to 250, or for the small cap thing, or for the small cap fund as well, beyond 251. What about investors who are fund agnostic or the size agnostic? Because there would be a lot of, you might be smiling at this, but I'm telling you, there are a lot of queries that come to us which actually go out and prefer the multi-cap schemes, because they're saying that we are not knowing whether the small cap or the mid cap or the large cap is a great fund to invest into, so we'd rather go for a multi-cap fund category. Now, for them, there is practically no change in their investment approaches at all. They will invest in a multi-cap fund, and the rules for the multi-cap fund will probably stay as they are. Yeah.
So the challenge is like this, that first of all, on your observation, you're right that there is no change in multi-cap. And in fact, that itself, multi-cap or diversified equity, whatever we call, that is the largest category in the industry. The only thing which changes now is that there is one multi-cap fund per house, because in the past, every fund was a pseudo multi-cap, almost, right? Because if the largest of, large cap funds were used to having 40-50% in mid cap or 30% in mid cap. So everywhere there is a sprinkling of something. And if you're generating in a large cap fund, if you're generating outperformance by having some 30% in mid cap, and then there is another guy who's sticking to his large cap mandate, So the comparison with the index is wrong, the comparison with the peer is wrong. At least now there is method in the madness. You are comparing the right things, and you're going to show your comparison in the right manner. I mean, you're showing the right numbers.
Okay. Motilal Oswal doesn't have too many of these problems, right? You guys have one multi-cap fund, if I'm not wrong.
Yeah.
Or maybe more. You have one mid-cap fund as well. So none of these rules will really impact you in a big way. Your investors need not be worried.
Oh no, for our investors and for us as a house, I think this is fabulous piece of regulation.
Because?
The reason is because we are supposedly a new age AMC. We started filing our offer documents post 2013.
Okay.
So whatever has been now formalized in a circular was always applicable to us in any case when we were filing our offer documents.
By mandate.
By mandate. Because
Okay.
just take an example. The circular says that mid-cap is 101 to 250. Now our mid-cap fund has a definition of 101 to 200.
But that is set by you or just set?
That's how the approval was done by the regulator.
Okay.
It was always, so that's how we were kind of directed to consider. So what has in fact happened is that what is a kind of clamp down for the larger piece of the industry is like a relaxation for our funds, at least in the mid-cap category. Large cap, we were always 1 to 100. We are in the bucket. Everything is perfectly fine. Multi-cap. So we have one product per category. We don't have much proliferation. Mid-cap, it's in fact good news for us. And the other important point is that now, since the categories are clearly defined, for people like us, it's a level playing field. So we can compete in the right spirit because we have the products slotted appropriately.
Okay. Aashish, we don't end a conversation with a guest without asking about what is the most recent observation. Now, it could be regards to investing behavior in mutual funds,
Yeah.
or a market outlook, and that might become very important right now, whether people should invest into mutual funds right now, considering the slew of events that are slated to happen over the next 3 or 4 days. Is it foolhardy to time the markets, which the obvious answer to which one be yes?
Yeah.
Or can people wait for a few days before allocating big money to mutual funds as well currently?
Yeah, so these might be these might be like famous last words because markets are always unpredictable. But I personally believe that if you take even the US markets, people quote it a lot, and then there's a 100-year history which people quote. If you observe it closely, everything happened pretty much between 1982 to 2000, right? When Ronald Reagan was the president and Paul Walker was the Fed governor, right? So 100-year history, but everything played out. There is a moment in time, a particular decade or a time span when things really transform. I personally believe we are in that kind of a phase.
For India.
That's why, and people like us, we only invest in equity. Other than equity, we don't do anything else. So viewers should take it with a pinch of salt. On a lighter note, I always tell people that portfolio managers like us, we are paid to be bullish because we can't help but be bullish. So keeping all of that aside, let me talk as if I am an investor. I would say that this is not the time when all the past yardsticks will really apply, because we are going through a lot of transformative change, like RBI targeting inflation at 4%,
Sure.
financialization, formalization, so many reforms. Whatever you are seeing, the whole change in the texture of who is our investor, lot of profound changes happening. So I don't think this is time to stay out. You can watch your asset allocation. You should not take too much risk. All that goes without saying. But this is not a time to be defensive for sure.
Great. Ashish, such a pleasure having you as always. Thanks much for taking the time out and joining us on the Mutual Fund Show. I look forward to have you more often than this.
Thank you very much. Thanks for having me.
That's our special guest, Aashish Somaiyaa, with his thoughts on, what this whole, not a diktat really, but a rule being set by SEBI would mean for you as a mutual fund investor. And if you have some investments in schemes which might have to consolidate, then what it could mean. But I think Aashish made a very important point that do watch your investments carefully if indeed they get classified or declassified as a particular scheme. That's actually the opening question to Pankaj Mathpal. He's our next guest on the show as well. Optima Money Managers joins us on the show now. Good having you, Pankaj. Thanks so much for joining in.
Thank you.
What implication for a retail investor would this norm have? What kind of investors should watch out for over the course of the next 90 days while this is being implemented?
See, when investors invest based on the goals, they have some asset allocation in their mind. And what is happening in equity also, there were no classification. So different kind of equity funds were there. So now with this consolidation, definitely some equity fund will merge or they will have choice to exit. So based on their goals, they have to decide whether they want to stick to that fund, they want to stay there, or they want to exit, or based on that thing that what kind of investment they wanted and what it is now, they'll have to take decision. So definitely when it is implemented, they have to see the scheme where they have invested and does it suit to their objective investment or no.
This might be throwing the dark at you, but any fund houses which have a large number of schemes open and might be the ones that will have to consolidate some of the schemes?
Definitely, like the ICICI Prudential Mutual Fund, they have 3 large cap funds in their they're managing right now. So or any other big house, even you talk about the Birla Sun Life, they have Aditya Birla Sun Life Frontline Equity Fund as well as Top 100 Fund. So there are more than one large cap fund itself. So when we say there has to be only one large cap fund, they have to consolidate it. So investor will have to see who are in who have invested in 2 funds or who have invested in 1 fund, but they had something different in their mind. They'll have to decide whether they want to stay invested in that fund or they want to exit it. So there are fund houses who have more than one scheme. There are 3-4 schemes in the same category even.
Sure. And that would be more proliferated in the mid-cap space, Pankaj? I mean, or no?
See, large cap, mid-cap, even multi-cap, anywhere you see, the big fund houses, if you talk about the small fund houses, they have only one scheme, but almost all big houses. You talk about ICICI Prudential Mutual Fund, Aditya Birla Sun Life Mutual Fund,
maybe even
Reliance Mutual Fund, Kotak even, they have multiple schemes in the same category. So it is confusing, definitely, and initially it may be a bit difficult for the AMCs. To manage it because the fund size is quite big. If you see that one large cap fund has a 15,000 crore AUM they are managing in this, and they have to merge another scheme which is almost same. Okay, there are schemes which are like 10,000 crore, 15,000 crore. So 25, 30,000 crore in one scheme, it is a bit difficult to manage initially, maybe for the AMC. But if you see from the investor perspective, from the advisor even point of view, or for the AMC, in long term it is really good. Because less confusion. Even as an advisor, when you want to explain this to your investor, it becomes difficult for you to decide that why this large cap, not another large cap. First thing, there are more than 40 AMCs. So within that 40 AMC, you have to decide that which AMC you are recommending. Then within the AMC also, you have to decide which large cap or which mid cap. Okay. So it will be really, it may be little painful in short term, but definitely good for the long term. Okay. So we, as an advisor, as a financial planner, I'll say that we'll get more time to explain the importance of asset allocation rather than explaining that feature of that product. Okay. So once there is a standard system, right now even if you see the large cap of one AMC will be different than the other AMC.
Of course.
So when there is standardization in this, then you can say that yes, the returns where it is coming from. Sometimes what happens when you compare 2 mid-cap fund of different AMCs, you will find one is outperforming the other one. But it is not because of that stock quality only, but it is because of many other reasons also. So how you are generating alpha, because of the stock selection or because of more risk you have taken in the portfolio. So when this standard system, it will be better for the investors, less confusion and easy to take decision.
Okay. So there's some, well, probably benefits for all stakeholders here. It's easier for investors to identify the scheme that they've chosen, and it's probably easier for the financial advisor to recommend as well. Let's ask Pankaj about some of those recommendations. Now, Pankaj, let's talk about 2 categories or 3 categories. What are the recommendations that you have and why? At this point of time, if somebody wants to choose a large cap fund.
See, large cap fund, I recommend ICICI Prudential Focus Blue Chip Fund because of its consistency in its portfolio, diversification, and it has generated alpha for a long period of time. So that is one fund which I always recommend to investors in this category. Another fund will be Aditya Birla Sun Life Top 100 Fund. And again, same thing, returns, consistency in performance, and the quality of stocks fund manager choose always. So these 2 funds are my recommendation in large cap category.
You also have an SBI Blue Chip as a recommendation?
Definitely. The third one will be SBI Blue Chip Fund, again the same region. These 3 funds, see, large cap fund, if you see, more or less will be the same thing, but again, the fund selection of fund manager that matters, and sometimes what happens in a fund, you see, it's a large cap fund, but there is mid cap even invested, the reason that you want to generate alpha.
Yeah.
So I think the fund which stick to is classification. If it's a large cap fund, there should be large cap stocks. If it's a mid cap fund, there should be mid cap stocks. But sometime it has been observed that some AMCs, it is done intensely that some mid cap stocks are involved so that some alpha can be generated. So I choose the fund which has consistency in performance, which has ethical investment system. There is some model which is followed.
Okay.
So based on that, the AMC, the fund selection, and the consistency performance, these three funds I have recommended. Yeah.
Okay. Now, before we move on to the next category of funds, Pankaj, there is a question. There are 2 or 3 questions, but one question that is coming in from Shine Paramal. He's a viewer who's asking about whether ELSS funds would get merged. I would guess, okay, what's your answer to this?
Yes, see, ELSS, because they can have one category. If there are 2 ELSS in the same fund house, then definitely they will merge it. So, but the question is that because there is a 3-year lock-in period and you'll not be able to exit during that period. So that maybe that for launching the new product they will have to do. For the existing fund, because there is a lock-in period, and so the investor who have invested, for them it's not possible to exit from the scheme.
Okay, so what should he or she do? I mean, is there any negative implication? I think that's what every investor would want to know. That I'm an investor in an ELSS scheme or a particular scheme. If it's getting merged, would there be a negative implication for me?
No, there is no negative implication for this. If you have invested and fund is moving well, it is good for you. And for ELSS, see, more than the ELSS, if you talk about the category wise, then there is difference. But ELSS is the diversified equity fund. So either you have 2 schemes in the same AMC, more or less these are supposed to be similar to each other.
Fair call. Okay. Lastly, before we wrap up, one set of recommendations, one fund recommendation from the mid-cap category, and if you can give us a recommendation in the multi-cap category as well.
In multi-cap category, you can consider Aditya Birla Sun Life Advantage Fund. In mid-cap category, it can be Principal Emerging Blue Chip Fund.
Okay, so these are a couple of names. In mid-cap fund, Principal Emerging Blue Chip Fund is something that Pankaj is recommending. And in the multi-cap fund, I think the recommendations just came in the earlier plate. Mirai Asset India Opportunities as well as Birla Sun Life Advantage are a couple of funds that Pankaj Mathpal does recommend. Pankaj, great having you. Thank you so much for joining us on the show and giving us your thoughts. And viewers, thanks for tuning in to this edition of the Mutual Fund Show.